First of all, I want to thank everyone for joining us today on the TradeXchange Weekend Webinar. People joining us through our webinar link and also through our streams, thank you. Just taking a brief look at last week, and then we'll jump on to the week ahead. Markets ended the week all higher by about 5%, with the Fed now on a blackout period. We will now have all the quote-unquote whispers of a Fed pivot as well as a possible pause, following those comments by Wall Street Journal's Timurawas on Friday. So we have 10 days of a Fed blackout period, 10 days for the thought of a shift to a Fed pivot process affecting markets, and 10 days of absolutely zero commentary from Fed speakers. A lot can happen in 10 days, especially with earnings, economic data, European issues, inflation, Ukraine crisis, energy crisis, and on top of that, the holiday season slowly upon us. So we could expect to see a lot of volatility in markets going into the Fed announcement the following week. And we expect that to be affected by all those previous issues, especially earnings, which we do have a few big earnings coming up this week. We'll go over that as well when we look at the week ahead. The 10-year yield continues to truck higher as we hit levels not seen since 2008. The 2-year yield broke above 4.6%, a high not seen since 2007. Markets as well saw strength as earnings are coming in not as bad as traders expected. And on overseas markets, we saw a shift after 45 days in the UK on a new prime minister following the disastrous initial movements on their economy that occurred before that 45-day process. Housing market continues to see a small slowdown as home sales dropped for an 8th month in a row. Freddie Mac came out with their mortgage rate views, a 30-year mortgage rate at 6.94%, which was double last year's number of 3.09%. It seems like the Fed wants to stop mortgages altogether and have people spend their savings on a much bigger down payment to ease those worries. So it's interesting to see what happens on the mortgage numbers, as we always have Wednesday morning, the MBA mortgage applications, to see how that affects markets on a week-by-week basis. Next week, we are on watch for a few key economic indicators outside of as always, the earnings that are coming up. Consumer confidence on Tuesday, new home sales on Wednesday, GDP on Thursday, and personal income and outlays on Friday, which reveals a key inflation point as well. On the international side, we have the ECB and Bank of Japan announcement on Thursday, and the Bank of Canada announcement on Wednesday. One thing we'll be watching as well on Friday is the Germany CPI. So we do have a flood of economic data as well as earnings coming up this week. But please keep in mind, members, we've been seeing a lot of volatility on every single time a Fed speaker has spoken. We have none of that for 10 days. So we're going to take a quick peek at the week ahead. As always, members, if you have comments or questions, please post them in the chat. We do have a few questions that come in every week on a breakdown of our thought process. So we'll go over that at the end of the webinar. So you have your upcoming US and world events. First, top earnings this week. We have a lot of big earnings. Apple, Amazon, Boeing, Biogen. We have a whole list. I'm not going to go through it, but as you can see, some big names reporting this week. And we'll be keeping a close eye on that impact on markets. On your event side, on Monday, we have on the US, excuse me, you have the PMI composite flash, and the EU PMI composite flash we'll be watching. Tuesday, we have consumer confidence, excuse me, as well as the EU and G7 conference on Ukraine. On Wednesday, as always, we have the MBA mortgage applications in the morning, pre-market. We also have new home sales, international trading goods, and Canada, Bank of Canada announcement. Thursday, on the US side, we got the GDP and durable goods. We'll be watching in overseas side, the EU ECB announcement, as well as the Bank of Japan announcement. On Friday, personal income and outlays. One of these is a very important aspect of an inflation data point, and that is the personal income and outlays. Typically, previous to this whole inflation issue, this was a non-event type of economic indicator, but closely being watched now as is the Fed in regards to their inflation points, which all will be posted in the news desk on that report. Friday as well, we have consumer sentiment, the EU economic sentiment, and Germany CPI. Company events for the week, as always. If anyone has any questions in regards to those, you can always shoot us a message in the news desk or on an email in regards to any questions or comments, or if any commentary specific on those specific names. Conferences for the week, as always, we mention this every week. If anyone has any comments or questions, shoot us a message on the Ask the Desk or an email for any clarification on any of these conferences scheduled. Taking a peek now at your economic calendar. On Monday, we'll be watching the PMI composite flash at 9:45 a.m. Tuesday, we have a few smaller home numbers, the Case-Shiller and the FHFA house price index, but we'll be keeping a close eye on this consumer confidence at 10 a.m. On Wednesday, we have that MBA mortgage applications. We have international trade, as well as new home sales. That is always something to watch in regards to, yet again, the inflation crisis. On Wednesday, as well as every week, we have the EIA petroleum status report in regards to crude oil, distillates, and gasoline inventories. Thursday, a pretty busy day. Durable goods, GDP, and initial jobless claims. All three indicators, all three watched by the Fed in regards to economy and jobs. So we'll be keeping a close eye in regards to this on Thursday. And on Friday, as always, we have this personal income and outlays, members. That is one key inflation report that is closely watched by the Fed. We also have your consumer sentiment to get a feel on a consumer, especially going into your holiday season. On the international side, you have a whole bunch going on at this point. We'll be keeping a close eye on your Germany PMI composite. You have your Eurozone announcement on Thursday. In the evening, Bank of Japan announcement. And on Friday, your Germany CPI. So we do have a pretty busy week as well on the international side. Earnings, as always, listed before market, after market. We do bold out a few of the big names that are being reported. So we do have a pretty busy week this week. Everyone is going to be keeping a close eye on Thursday after hours, as we do have Apple and Amazon, AAPL and AMZN reporting their earnings after hours on Thursday. Your fear and greed. Last week, we saw an extreme fear print. Now we're back to a neutral mindset. Is it because of Friday? A lot of traders believe that the quote unquote Fed whisperer could possibly have changed the thought process in the next 10 days going into the announcement on the following week in the beginning of November. So we'll see if that neutral mindset continues throughout the week into next weekend. Your weekly sector performance, all green across the board. Energy, the strongest in the group, up 8%. Technology, materials, consumer discretionary, all higher across the board. Some of 5 to 8% strength. The weakness, though, we did see a little, not weakness, but not as strong as all the other sectors in consumer staples, healthcare, and utilities. A quick chart, your industry comparison. Keep in mind, this is COVID. We did see an uptick in markets following last week's strength, still above those COVID levels and above those June lows. We added the sticky price consumer price index, getting an idea of your sticky price core side of the CPI, not seen since the early 80s, actually. These yellow tabs indicate recessionary times. Still, according to this, we are not in a recession. So we'll see with this GDP number coming up this week, if that changes or if we see any adjustment in regards to the CPI in the upcoming reports. Target rate probabilities for the November meeting, clearly The thought process is 95% on a 75 basis point hike. So we'll be keeping a close eye if that adjusts. But as of right now, that has been priced into markets for quite some time. Year-to-date percent returns. We did see weakness this week in some of the previous strength areas. The VIX down about 12%. Heating oil down about 7%. Natural gas took a whopper of a hit this week, down about 30 to 40% on nat gas. So it's interesting, when nat gas was trading around $10, the thought process on media was, oh yeah, we're going to hit $15, $20. But here we are at $5. So nat gas took a wallop of a hit. Gasoline, not much of an uptick. Crude oil did see an uptick, back above that 20% for the year. Corn, small downtick, and wheat as well hit a small downtick. So those 7 categories have been green throughout the year, and they continue to stay green. We'll see what happens, especially keeping an eye on this nat gas. That drop is a pretty big drop in a specific area that people thought was going to be one of the biggest gainers all year. So we're keeping a close eye on your year-to-date returns. Your AAII Investor Sentiment Survey did see an uptick on the bullish side, but as well saw an uptick on the bearish side. So the neutral mentality has dropped, but we did see upticks in bullish and the bearish mindset on the Investor Sentiment Survey. Sector outlook year-to-date. Energy continues to be the only area that is green on the year, with weakness continuing in the communication services, real estate, and consumer discretionary. You have a few IPO lockup expirations on tap for Monday and Wednesday, as well as some that are already scheduled on the FDA calendar, as well as some expected IPO openings for the week. So we'll jump into some charts real quick. On the we do this on a week by week basis. Sometimes we add a few, we take out a few, that are depending on what is moving in the markets. So we're taking a peek at gold. We added a support level right here and added a short-term downtrend that we did see a break of on Friday. As you can see, gold tested those previous lows earlier in in late September, and basically bounced off those levels, breaking that downtrend. So we'll see if that continued strength comes into action this week. Traders in gold, bullish traders in gold, would like to see a continued move to the upside, keeping an eye on that 1700 resistance level. More color on that, as you can see, are posted in our notes, but we'll just give a brief breakdown. On the SPY, no change to this chart. Once that downtrend was broken, we did see a possible base being formed. As always, on Friday, those comments saved a lot of charts, as you'll be able to see. That 360 support was tested last week, did not break, especially on Friday. We did see that reversal to the highs. So we'll be keeping a close eye on the SPYs, watching that 360 support short term with that 380 upside. But we do have that downside downtrend break. We'll be watching the volume, which we did see that spike. If it continues, we could see an upside move above that 380 level. On the NASDAQ daily, no changes to the chart. The downtrend was tested completely the past week twice, with a resistance test as well on 11,000 in regards to the NASDAQ. So we are seeing a technical chart here on the NASDAQ composite, basically right at the downtrend. We'll continue to see if that is broken this week. We'll get more follow-up and more follow-through going into next weekend. As we've been saying, you'll see a lot of chart action because of that one-day move following those comments on Friday. SPY on a daily, moving average-wise, we are starting to see a little turn on your short-term moving averages. So we're watching these. If this continues throughout the week, long-term moving averages, though, continuing on the downside. Short-term, trying to see a base or a bottom, quick bottom formation. Triple Q's daily, same mindset. Long-term moving averages continuing lower. Your short-term moving averages are seeing a turn to the upside. as we'll say this one last time, this has, when we looked at charts on Thursday and the charts on Friday, Friday's move made a lot of difference in a lot of charts on a short-term basis. So we'll see if that continues into this week. IWM on a weekly basis, testing these support levels numerous times. We did see the IWM continue to remain below the 40-day moving average, but we are starting to watch this as a possible basing level here, as we saw at this point and this point previous. So we're going to keep a close eye on these support levels on your IWMs. 10-year yield weekly, basically right at that resistance level from 07. We'll be watching this very closely, as we believe your yield markets and the US dollar are dictating current moves in markets. Another look at your 10-year yield weekly. No changes to this chart, members. It's following this uptrend to a T to the highs of the day, basically the highs of the year. 4.333% was hit. 12 weeks in a row of strength in the 10-year yield market. We'll continue to watch this. That 4% level we mentioned as resistance last week, which closed right at it, broke through it again and hit new year highs. Diamond on your diamonds, the daily side, downtrend break. Short-term moving averages strength, long-term moving averages still showing weakness. We got that test level on that long-term moving average around the 315s. That's the declining 50-day moving average that we're watching very closely. Last time that was broken, we saw a quick move from 320 to 345 level. So we're going to be watching that level on a possible test and a drop, or a strong test upside move. So we're watching this one closely on the Diamond DIA. Another look on the IWMs, no changes to the chart. Tested that downtrend perfectly again the past week. So we are watching the support and resistance levels with a key resistance at that 180 level. Keep in mind as well, that does have a downside downtrend, upside correction, an upside break on that downtrend, and we could see a test at that 180s level. HYGs, again, short-term moving averages showing some strength, long-term continued weakness. We are seeing a downside downtrend break to the upside. We'll see if that continues. Volume is key. As we saw on Friday, that volume reversal showed some strength, so we're keeping a close eye on the HYG. Euro weekly, 37-week downtrend, tested numerous times. We are waiting for a possible parity break at that $1 mark, which could show some strength in the euro, weakness in the US dollar. As always, the volume on these moves is very, very key. Your VIX weekly saw a lot of testing of previous resistance levels, selling off, testing, selling off. We're watching this 28 as a short-term support level on your VIX, and we'll see how that, what the outcomes will be on the following week. But we're not seeing that big a move on the VIX correlated to the moves we've been seeing in markets. So we've been saying that for a while. Why is this happening? Thought process and the people that we've spoken to said, once the real action in the VIX happens, we could see a big move in either direction. So we're watching any move to the downside for an upside move in markets, or a break of that 34, 36 level for a downside move in the US equity market. Oil daily, no changes to the chart. Tested the downtrend yet again. So we are watching a downtrend test on crude oil going into this week. 82 levels on watch on that resistance, and that's a short-term support on the 80s level. So we're watching crude oil this week for any of these upside moves. Very tight range on crude oil. US dollar daily, no changes to the chart. Tested that uptrend perfectly yet again. But we are starting to see a possible rounding top. So we're watching the US dollar. We've been saying for a while, as always, we'll say one more time, we believe the US dollar and the yield markets are affecting our day-to-day equity markets. So we are watching the US dollar here on a possible uptrend long-termish. This is from August time. So it's about almost a 3-month, 4-month uptrend right here. We're watching this uptrend on a possible break, but we are watching levels on the 110 support with that 115 upside resistance. Bitcoin, I don't even know, like we've mentioned in the chart, Bitcoin is so out of the news as well as all of crypto. Nothing is happening in Bitcoin, still trading in that 18, 20,000 range. When the volume comes back, we could possibly see a very strong move. But as of right now, we're watching this little range. This chart hasn't been changed for months on end. And we added a little SMH chart at the end this week. We believe the SMH is one of the key indicators for the NASDAQ upside move. Are seeing a downside break with a lot of moving averages tested, but we are starting to see yet again your short-term moving averages moving to the upside as long-term continue on a downside move. So we'll be watching the SMH very closely going into this week. And that is your weekend webinar. We'll open it up for a few questions. We're going to be checking our emails in regards to questions as well. So give us a quick view on a mic silence as we go over the questions via email. So one of the questions that come in every week is our thought process in the markets for the week. As we mentioned, members, this week it's quite different not seeing any of the red on the board in regards to Fed speakers, but our thought process is the same. We believe markets are being watched closely on the yield side as well as the US dollar. We have a whole week without Fed speakers. We've been watching every time a Fed speaker came on, either via TV, a speech, or a conference, markets saw weakness. So following those comments from Wall Street Journal on Friday, the question comes down to, is the mindset on a pivot back? Is the mindset back to a pivot in regards to the FOMC announcement coming up in early November? So with that being said, our thought process is earnings this week, with Apple and Amazon being key, Microsoft as well. We have some economic data that we'll be watching. We have the personal income and outlay on Friday of this week, which is an inflationary print. We're watching some of the home numbers coming out throughout the week. But as of now, the mindset ending last week on Friday is to the upside. We'll see if that continues this week, especially with no Fed speakers scheduled. If anyone else has any other questions, please shoot them in the chat box, please. And we got a few more on the email side. We're just going to go through those and then we can end the webinar for today. So a quick question is, what is a Fed blackout period? So the Fed blackout period is a period prior to the FOMC announcement. Typically, it's a 2-week period where the Fed is on a blackout, which means they are not allowed to speak in any facet to the media or in regards to the any conferences or speeches. So we have that until November 3rd of on the Fed speak blackout period. So this week, clearly we have none scheduled going into next week in regards to Fed speakers. When it comes to the question was regarding the bear market, when it comes to the bear market, the mindset is, from a lot of commentary that we've heard, traders we've spoken to, it's not easy in regards to predicting the end of a bear market. The question comes down to, in our opinion, is based in regards to a lot of facets. You have inflation, which is something that many traders these days have not experienced. You have a tightening Fed, which traders these days have not experienced. So you have a lot of outside noise to be dealt with before we can honestly say the bear market is over. Until inflation is controlled, until volatility is eased, until the GDP shows strength, until earnings start to come back, jobs continue to stay strong, which is one of the positive aspects of this whole situation. But predicting an end of the bear market is impossible in our opinion. And if people do predict it, I recommend you stay away from those people who not listen too much to what they say, because we've seen it happen how many times this year alone. People on TV, media personalities, economists from March, April saying inflation has peaked. Clearly it hasn't peaked. We've seen it happen numerous times since the beginning of this year of media personalities predicting a bottom in markets. Clearly a bottom hasn't happened since that's been going on. So in our opinion, we like to focus in what's in front of us on a day-to-day basis. There's thousands upon thousands of equities that we can invest in throughout the day. Do your due diligence. But as of right now, we think this volatility will continue, especially going into the holiday season and seeing what the consumer does with inflation batting down the doors on every U.S. citizen in regards to prices. But clearly the job side is strong, and from what we're seeing, it's continued to stay strong. So bear market over? We don't think so. One last question we had on the email side: thoughts on an overall outside the US on the international side. Members, as always, we watch everything. We believe that, yes, UK never affected markets, but UK has been affecting markets. It doesn't matter if it hasn't in the past. Another example, personal income and outlays was never an economic data point that was watched previous to inflation, but now it's being watched. We watch everything. We look at charts, we look at overseas markets, Fed commentary, EU commentary, Asia commentary, the Ukraine-Russia crisis, the energy crisis, because all in all, this market right now is headline by headline, and everything is affecting this market. So in our opinion is, yes, watch the charts, watch momentum, do your due diligence. At the end of the day, sometimes the smartest thing is to step back, evaluate, and see what the direction is going to be. We don't always have to play. We can take the day off. We can see what the market does. With this type of volatility and this type of mindset, when 1 week it's a pivot, the next week it's not a pivot, the following week it could be a stop or a pause, who knows? But at the end of the day, we provide the information that we see, the facts, and we give you our opinions and thought process on the weekend webinars. And for now, it's still a toss-up across the board in every area, especially with earnings. One question we had is: weakness in Europe likely to boost the U.S. markets or negatively impact them? I think that question was answered on the UK side. Once UK saw that weakness, even though it didn't have that much of an impact on the US, we did see that weakness fall onto US equities. And one thing we have to worry about and think about now is we're going into the winter season. How is energy going to affect Europe? It may not affect the US markets that much, but if it affects Europe, in our opinion, it affects the US now, because the mindset is as a whole. And right now, whatever is impacting overseas markets, in our opinion, will impact US markets. They all say across the board, the US economy is strong, jobs are doing great. But in reality, we have to look as traders, you have to look at the overall picture, because we're not only trading US markets, we're trading the impact the world has on US markets as well. So we do watch European markets, we do watch European headlines, we watch the Ukraine-Russia crisis, Asia crisis, and we have to understand that, yes, they will impact US markets, in our opinion, on a negative mindset moving forward, if it's a negative thought process in Europe. So on that aspect, we think that it will be similar impacts on the European to the US equity side, and the same thing on the US to the European side. We believe that that is the mindset as of now, but as always, the mindset of this market could change overnight. But as of right now, we're watching Europe because Europe is impacting US markets. So if you have any other questions, if not, we'll be ending this week's webinar. Once again, a few updates, members, coming up on the TradeXchange side, we're happy about. The community chat room is up and running almost. We'll be running some beta tests in the next month or so. We are creating that on the Discord side of the TradeXchange. One cool aspect as well is we've created a Discord bot for the TradeXchange, which will provide you information from the news desk into our Discord room, so you don't have to have all the rooms open at once. So it's a little fun thing that we've been working on. We're excited to build that TradeXchange community for all our members. We are also working on the TradeXchange, finalizing a huge update on the TradeXchange Squawk, providing a much cleaner, faster, smoother version of our Squawk. Should be up and running as well this quarter. So we're excited on a lot of things. We'll be keeping an update to all our members in regards to those. And once again, I want to thank everyone for joining us today. Enjoy, be safe. Check the news desk to get yourself ready for Monday. And we'll see you all in the Squawk on the pre-market prep. Thank you.